Hi everyone. Let's take a look at problem 15-1A, where we are asked to record transactions and market adjustments for trading securities. Okay, we're dealing with the Carlsville Company. They began operations in 2008 and they invest idle cash in trading securities. And then we have a list of the transactions that you see on the screen now, and they're all short-term investments in trading securities. Okay, I'm going to slide a little bit, and we're going to see what the requirement is. Okay, and I think you can see that now near the bottom. Requirement 1 says, prepare journal entries to record these short-term investment activities for the year shown, and ignore any year-end adjusting entries. And we can omit the dollar signs if we like. Okay, well, the first transaction, I'll slide back up so we see it. Unfortunately, we'll have to do a lot of sliding on this one, the way it's set up. Okay, what I did in that brief second there that your screen changed is I shrunk the spacing, so hopefully we'll do less sliding up and down. Alright, so on January 20th, we're reading here now, we purchased 800 shares of Ford Motor Company at $26 plus $125 commission. Okay, so what's the entry we need to record? Well, these are all short-term investments, short-term trading securities. So we've got a debit for short-term investments trading for the Ford account, right? And we would probably keep a separate account just for the Ford. And we purchased this, so I'm sure we used cash. All right, now to do the Excel, we know it's $26 times 800 shares plus 125. So it's actually, why don't we do this real quickly here? We'll jump over to Excel and we'll drop in just that information they provided here. Boy, I was hoping it wouldn't behave like that, but that's okay. We purchased $800 of shares. I'll just put 800 shares here at $26 a share, right, plus 125 commission. So we'll drop the 125 in here, right? And right here we'll do the multiplication. 800 times that 26 is 20,800. Okay, I'm going to underline that. Now I'm not going to label this in the interest of time. And then we take the 20,800 plus the 125, right? So really the dollars on this one are these. So we've got, oh, this is not a time. This needs to be plus 20,800 plus $125. Right, so if I do that quick calculation, I guess we really don't need the dollars there at all. And we could double underline that. We get $20,925. So if we jump back to where we were, we'll drop in the 20,000, that dollar amount. Okay, so that was 20,925. Right? And that takes care of the first entry. Now on February 9th, we purchased 2,200 shares of Lucent at $44 per share plus $5.78. We use the exact same process, so I'm not going to model that in Excel on this one. But what we know is, again, we're buying short-term trading, this time of Lucent. Let me slide a little bit. We're going to lose a little bit of the transaction. But we're going to buy shares of Lucent, and again, for cash. And this time, with 2,200 shares at $44.25 and a $5.78 commission, that total amount would come to $97,928. Now, if you want to recalculate that, you're more than welcome to do so. Stop the presentation while we're doing this. Okay. The third one just appears at the top of the screen here. On October 9th, we purchased 750 shares of Z7 at $7.50 per share, plus a $200 commission. So again, we're going to multiply 750 times 750. Once we come up with that answer, we'll add in $200. And that comes out to be $5,825. So I know I got 5825 and 5825. Okay, now, on October 12th, we're buying Z7. The credit is to cash. Okay, and that takes care of the purchase entries that occurred in 2008 that we saw right there. Okay, next we'll move to 2009. I'll slide a little bit. And we begin selling some of these. We sold 800 shares of Ford Motor Company at $29 per share, less a $285 commission. All right, so again, I'll do the calculation in Excel, and we'll see what we come up with. So here, oh boy, this time I want to, let me just move that here, I think. Much better. And I'll do just a little calculation. I'll copy this from here. Well, this time we sell the 800 shares at $29, right? And the commission is $285. Okay, so this time we need to subtract out that 125. So we take the 23,200 less the 125 for net proceeds of $23,075. One thing I've noticed here is that's $285, so this needs to be $285. I had copied from above, so the net proceeds are $22,915. Okay, if we shoot back over, slide on down, we can start dropping that in. So we leave it here. Okay, so we're going to receive cash of that $22,915 that we just calculated, right? So this then would be cash. And the original cost of the Ford motor was the $20,925. Now, I'll just put that in the third one. You could put it in the second as well. That's fine. But I'll put it in the third. I'll say the third bucket, meaning 1, 2, 3, right? And that was our short-term investment in Ford. So it's going away at cost, $22,905, and the difference between the $22,915 and the $29,925 is $1,990. And that then would have to be a gain. It's a credit, right? So the difference between the proceeds after the commission less the cost of it is the gain. So 1990 goes there. Okay, now I don't want to go through all of these because we've gone through a couple examples already. And so in the interest of saving time, let's just illustrate a loss. So let's take a look at this transaction on June 21st here. We sold 2,200 shares of Lucent at $42 per share, less a $420 commission. So let me copy that. We'll jump over to Excel again. We'll see if I can throw that in the right place. So now this time, using the formula that I've already put in, we'll drop in the number of shares here, which is 2,200, right? $42 is the price per share. So the proceeds are $92,400, and then we also had a $420 commission. And if we subtract the $420 from the gross dollar amount of value of the shares, we wind up with net proceeds of $91,980. Okay, so this is a June 21st entry. And with that information, I'm going to go down to June 21st. I think it's June 21st, right? Yeah, June 21st of 2010. And this one splits on a page. Let's see what we can do. Wonder if I can just do a control break here. Yeah, that'll work. And we can slide up, and now it's all together. All right. Well, we're going to get the proceeds, and that proceeds was the $91,980 that we're going to net. So let's drop in $91,980 there. Okay, now we need to figure out what did we have in our books for Lucent. Oh, and by the way, that's cash, right? But we need to get rid of the Lucent we had on our books. And I guess what they're doing is there it is. I just couldn't find it. Sorry. I thought I was being limited, but we're not. And if we slide back up to the original Lucent transaction, okay, we purchased it at $97,928, so we need that number to drop in. And I know the scrolling is a little bit hard on you, so bear with me. I'll slide up just a little bit more. And there's our 97,928. So then the difference then becomes a loss, right? We bought it at 97,928 net of commissions. We're only going to get cash proceeds of 91,980. So that difference, which is 59.48, okay, and I've done the math off to the side previously, would be a loss on sale of short-term investments. Okay, now let's just slide down and look at requirement number 2 and maybe talk about it. Okay, so let me read that. On December 31st, 2010, prepare the adjusting entry to record any necessary market adjustments for the portfolio of trading securities when HCA's share price is $36 and Black & Decker's share price is $43.50. Okay, now we didn't work these, but what you would have to do is compare the market value of these stocks to the book value. You'd compute the market value of HCA, and then you would compute the market value of Black & Decker. Okay, now I'm reading down here just to put your eyes in the right place here. And we would multiply the shares we have times the price, compare it to the book value to determine if there's a gain or a loss. Okay, in this particular problem, we do have a gain. And because we're dealing with trading securities, right, short-term investments, we would recognize that unrealized gain. The unrealized gain is always a credit, so we would have an unrealized gain, and there should be a box over here, we don't see it, and we would record the unrealized gain at the difference between the cost, or what we currently have stored in the general ledger for the securities on hand, versus what the value is, which we just computed right here by multiplying the number of shares we have times the price. And then we would debit an account called market and adjustment on trading securities. Okay, so I just wanted to walk through how requirement 2 would work. Now we're not actually going to do the dollars since we didn't work that part earlier. Okay, thanks everyone. I hope you found this beneficial.